Yeah, our Palantir calls from yesterday don't look so good. It would take a miracle. Now, I believe in miracles. Open Door, though, unfortunately, those shareholders aren't getting a miracle. That stock's down 19%. Strive, Archer Aviation down 12%. NVIDIA's down 2% as well at 185. I kind of want to buy some NVIDIA, to be honest. Okay, there we go. Market's open. And we go from 194, 195. Maybe they marked these puts already? Nope, 177. 180. There we go. Down to 30 cents a put. Oh, a call. Excuse me. All right. Well, at least Palantir's green. So who knows? You never know. But it would take a big rally in Palantir. Meme stocks? What meme stock? What are you talking about? Some of you need to get disciplined. I'm going to discipline some of you. We'll see. I feel like it's really oversold, so maybe I might roll. Palantir's a great company, actually. I bought some common this morning. I'm going to sell the common. Maybe, what else should I do? Short Rigetti. Rigetti didn't make it. DARPA's been having these awards, and Rigetti didn't make it to the second stage. So Rigetti, amazingly, was denied stage B for the DARPA awards. All right, so should we roll this into next week? Or just buy more for next week? Let's see, November, what are we going to do? 180s. The 180s are only $4. It's not bad. 177s are kind of even better. 175s or the 170s. We can buy them all. We can buy them all. All can be yours if the price is right. Oh, you thought Shkreli was done with this trade. Oh, no. No, he's not. Oh, you thought he was finished. Let's see. Long 10, Palantir, no. 14. What'd I buy? Which strike? I started in the monies. 170 calls. INQ, wow, down 8%. I'm actually flat on the day, or actually slightly up on the day in this other account because Quantum's puking so hard. I always like Palantir. I think I programmed this fake P&L component from Thinkorswim. It's really good replica, right? This is really good replica of Thinkorswim, right? It's all a show. I'm down a lot on this trade, so I'm not happy, but it's okay. It's a good replica. It's a good replica. You don't say long on Palantir, you say long Palantir. I'll teach you the lingo of Wall Street. We don't talk that way. Nobody talks that way. You're not short on Open Door. You're short Open Door. And no, I tweeted that I covered it. Come on, guys. You could do better than that. I just showed it to you, Vector. What's wrong with you? I don't know why I'm fighting with these idiots. I really don't like it when people lie about me. I work pretty hard. I try to show you guys something real. WU? What? Western Union? Why would I do research on payment processors? I'm a pharma bro. I do pharma and software. I don't get into payment processors now. Pat C, we just are closing our series seed right now, so you're out of luck. But our Series A is coming. I think we're done with individual investors, so appreciate it. We had a pre-seed, we had a seed. Those are the opportunities. Now our Series A is coming, so I think it's going to be institutions mostly. Unless you're really rich. Really rich. Yeah, the product's still improving. We got a ways to go. You know, it's early days on the product. We have some cool surprises coming, though. All right, I bought some more Palantir. What do I got here? 25, no 170s. Well, sometimes you buy call options and they go out of the money. They go worthless. That's normal. Now, NVIDIA. What do you think about some NVIDIA calls? You got to take W's, you got to take L's. You think it's only W's? Do you think we're going to have up only? Palantir's valuation is not bad. People don't understand it. I showed you DCF yesterday. People just fundamentally don't understand Palantir. If cancer, developing drugs is something AI just like intrinsically isn't that valuable. It's very hard to, let me talk directly to the camera here. I don't know if people want to clip this. It's very hard to value growth stocks. A lot of people have an easy time valuing value stocks, which the term is a little bit of a misnomer. Value stock has come to mean a company that's not growing quickly and that the company's value is at some low multiple. But the reality is that whenever you want to value a company, whether it's low growing, no growing, negative growth, or high growth, or very high growth, the job of an investor is to value the company. And it's harder to do when the company is a high growth company. I'll give you a really good example. When Google went public in a Dutch auction, there was one value investor who bought 5% of the company. His name was Steve Mandel, a tiger cub called Lone Pine. Google was growing very rapidly. And for a lot of people, the valuation was just a little off. It was too expensive. But Mendel saw that a company that could reliably grow revenue at 20% and therefore grow earnings at 40% was worth a lot. And the compounding machine would take care of things over time. Obviously, Google went public in the tens of billions and is now, in the trillions. It's a very important lesson for people to understand that long-term revenue growing is very hard to value. And you should play around with DCFs and realize that 200 times earnings, 400 times earnings can paradoxically be cheap. Well, the reason a lot of people are averse to hearing, 200 times earnings, that sounds expensive. Well, yes, if you're growing at 1% a year, 200 times earnings is expensive. But if earnings are doubling, well, 200 times becomes 100 times, becomes 50 times, which becomes 25 times, and you still probably have a lot of growth. So ultimately, try to understand operating leverage and margins for a business. Try to understand what the growth is. If the growth is 68%, which is what Palantir's last quarter revenue growth rate is, the true operating leverage earnings growth is probably over 100%. So if your earnings are growing over 100% and it's even accelerating, maybe even going to be 200%, it's not going to be that surprising when Palantir is actually trading for around 40 times earnings, which for such a big grower and good management team is actually pretty cheap. So again, try to sort of get your head around companies that are not Coca-Cola or GM and try to understand how to value really high growth companies. Focus on cash flow is my advice. ChatGPT is like, that's not value investing, that's gambling. ChatGPT always has the same like little things. No, it is hard to value growth stocks. That's what makes them so tricky. They look expensive. The real question on a growth stock is, will the growth continue? And the second the growth drops, as you can see from Duolingo dropped 30% yesterday because there's like sneaking suspicion maybe growth was slowing. I mean, look at this. This company is growing like crazy. Take a look at the sales growth. Forget the earnings growth. The earnings growth is 100%, 400%, 300%. The sales growth, I want you to zoom in on this, Jamie. The sales growth for Duolingo, look at this. 40% revenue growth. 47, 44, 41, 37 for this year, 20 for next year. That's a lot of growth. But the stock dropped because there's questions, there's hints. Maybe the revenue growth is not going to persist. Maybe they're under siege. Well, that's a big problem, right? So the question is, when will that appear for Palantir? It might. That's the question. Palantir is accelerating instead of decelerating, and that's the surprise. Well, I'm not saying Palantir's you go out and buy it. I mean, for me, it's a beta vehicle that I can kind of trust. It's had a nice mean reversion property. The street likes it. It's kind of what people will buy when the market's down because people like to go shopping, and it shouldn't have too much negative beta. It has a lot of positive beta. So to me, it's like, kind of a safe buy. I probably overdid it on those calls, but I might jump back in. 22 cents. What do you guys think? Jump back in? Yeah, 13Fs can be okay. They're not great. Not a fan of Tempest, no. But I also don't know much about it. I have NVIDIA calls. I just bought some, yes. Pretty large amount, actually. I care about Citadel, Millennium, 0.72, Balyasny. Those are the types of people I care about and deal with. Part of the reason for the punt is if it does go in the right direction, I'm going to start screaming and jumping on my desk. What's working? Fortunately, we will not be celebrating today. Elliott, absolutely. I don't know about Saba. I don't know those guys well, but Elliott, I talked to them and they're a great firm. They're actually they're the largest single manager hedge fund in the world, but I never hear anything about Elliott. I hear about Michael Burry. I don't think Burry really has too many outside investors, to be honest. Baker are excellent long-term biotech investors, but because I know that space real well, it's sort of a different bucket for me. That's why I was starting my study of the software industry yesterday. Not starting, I guess, but starting that specific data collection. I don't know, WT. It feels like maybe the answer to that could be no. But I don't know. It really depends. Like, is it all over or not? I mean, it's not about a degree. No degree is useful. It's about what you've learned, what you can talk to people about, what you can explain, what you think. How do you parse information? What value do you bring? Do you think going to college to get a degree is useful because of the... I mean, if the education wasn't useful to you, you should have stopped halfway through and said, I got to study something else. I mean, economics is useful. There's a lot of use for it. Maybe you didn't learn it or apply it or whatever, but there's plenty of people who want to talk about economics and hire people who are good economic thinkers. It's about the person, not the degree. Yeah, I don't even think it's about the relationships or experience. I mean, it's how much did you care about it? How much did you parse? How much did you pick up? You know, if you really... it's a superficial study of the material and you just kind of coasted. I mean, if you really threw yourself into it, I mean, that's different. Open door, almost flat. I thought it was done. Was it done? Yeah, a ton today. Yeah, it still feels like there's a lot of beta in the market and we're just going to get a big recovery. And in a week, we're going to be like, oh yeah, that was an interesting correction. New all-time highs. I think this is a big head fake. Like, Altman can raise it $1 billion market cap. I'm sorry, $1 trillion market cap right now. And that's going to make these bros so mad. Like, I can't believe it. Trillion? It's not even public. Lobster and steak. I had steak last night. Went to Quality Meats. Shout out to anybody who I met there. Met a couple people. Met this bad Asian girl. All jokes aside, I appreciate all the love when I go out. You guys are great. Which famous investor has most influenced you? That's a great question. I mean, hands down, Buffett. You know, Buffett is the best ever. Maybe the best there'll ever be. Who else? There's some people you don't know, like that just aren't well known. Former colleagues of mine, stuff like that. I don't know about Fisher. I don't know about Kramer. Kramer is a great trader. But investor? Maybe Rod Wong. You're talking about long-term investors? That's about it. I'm better at investing. Chris is kind of a Buffett, you know, Buffett clone. There's a lot of Buffett clones. Thiel? I don't know. Yeah, I guess Thiel. You know, it's a great growth stock investor. Maybe the best that ever did it. Steve Cohen, you know, I was thinking about saying Steve Cohen, but, you know, it's more of a trading thing than an investing thing, although he's obviously great at both. Yeah, I mean, when I just think about biotech, it's hard because I view a lot of these guys as peers. But Edelman, obviously, you know, I think at least personally for me, one is, you know, a fantastically supportive person and somebody that's been very good to everybody on Wall Street. You know, very few people have anything bad to say about Joe. I don't know if I've ever heard somebody say something bad about Joe other than him being one of the most generous, thoughtful, personable, caring guys. He's never been anything but great to me. I owe him a lot. But, you know, I'm not sure I can say I've learned that much from him. I think I maybe learned a lot of stories about his dealings in binary events, and that inspired me for sure. But yeah, the interaction there is mostly on the side of raising money from him. Ed Thorpe ran the first ever quant fund. I never met Ed yet. He's very old. He's like 92 or something. So those are people who personally have influenced me for sure. But, you know, you don't want your list to be that long. There's a lot of people who are like, oh, I can learn something from everyone. Number one thing to learn from is yourself, you know. You should develop your own unique philosophies of investing that work for you and make sense to you. Buffett, I mentioned my friend had dinner with Buffett, and, you know, he said that he asked him about all other investors, and he basically didn't care about any of them, which is the right way to be. Me, myself, and I Capital. My friend Pedro, shout out to Pedro if you're watching. It's Brazilian mini Buffett. Said it, Buffett and me are the only two guys he likes to invest in and trusts. It's very sweet. He followed Buffett around. He basically, I think he maybe still follows Buffett around to like public appearances, and he just kind of has these, you know, Buffett's very generous and nice with his time. He basically says, oh, you can come to dinner later tonight. I'll be at this steakhouse, and, you know, he'll be there. And depending on who it is, like sometimes people won't even ask. People will be able to, you know, people will ask questions or whatever and be able to, funny, I'm looking at Facebook, some old photos, taking me down memory lane, some old albums. Shout out to my dad. Here's an old photo of my dad on the right. Rest in peace. There's 𝗥𝗍𝗘𝗦, one of my attorneys who was recently doing the Puff Daddy case. Ooh, market getting smoked. 𝗥𝗍𝗘𝗦, my dad. Ah, here it is. It was just hidden away here. Okay. That's my friend Pedro, and that's Warren, of course. You know, there's basically just one-on-one dinner with Buffett, you know, people would pay millions for. And he just asked him questions all night long. And like I said, he asked him like what he thought about various superstar investors, you know, Soros and Simons and people like that. And he just said, I don't care about what they do. I care about what I do. And I'm sure they're very good and they make money, but I do it my way, and I don't need to do it their way. And, you know, I think that's, you know, if you want to try to mix every style of investing in one weird blend, I think that's kind of a dumb idea, to be honest. You know, it's sort of better to just be yourself and try to, you know, have some guiding star, some true north that's like a really specific, you know, kind of code. Now, obviously, you know, I don't know, sometimes you break the code, but most great investors I know, they adhere to like a very, really rigid kind of set of views that they truly believe in. If that makes sense. You know, but even those break the code, you know. I feel like the bad things sometimes happen when you break the code, like at Renaissance. And the main things is never override the model, but they actually did override the model. So, you know, it's kind of generally you try not to break the rules. I don't know. I broke my own rules. That's the rationale, not. I thought the market was oversold. And clearly, that was not the right call. I tried to pretend I was a trader and that, you know, I'm not long Tesla. I'm not saying I'm not a Tesla fan, but it's not like my favorite. I don't have PGen. I probably would buy it though. I think Biohaven's long. I mean, they're probably going to do financing, but they have a lot of investors who like the stock. I think I'm at 850 or something on Biohaven. I'm not doubling down on it. Yeah, Tesla's a little bit harder maybe for me to wrap my head around. It's very much a bet on management that is already implying like very large amounts of success for optimists, which I don't have any doubt that it'll be successful. But my investing, for me, you know, everyone's a little different. There's a continuum on one extreme left where you just trust the jockey and you just invest in the person and that's it. And this is, in a lot of ways, one of the best ways to invest, because you couldn't picture what Tesla became. You couldn't picture what NVIDIA became, but you had to trust that the people involved, Palantir's the same way, were going to make it work. This especially applies to startups, but it applies to all sized companies. When you are dealing, so that continuum, that's all the way on the left. All the way on the right, you have people who don't trust management at all, don't care about management quality, and only really care about the value of the assets. You know, this is cigar butt investing. If a company has a portfolio of $100 worth of stocks on the balance sheet and the stock is trading for 50 and the investments are worth 100, well, you don't really care if management's good or bad. Now, the problem, of course, with that is that, you know, management still controls the company. So you have to deal with management whether you like it or not. So I think fundamentally, cultivating over decades who is a good manager and who isn't is a really important thing. You know, Abivax was an instant buy for me because I knew Mark DeGarradell from 2 prior companies where he was CEO, and he did very well. And now this, for me, with the third, for others, it was 4 in a row for him. He's kind of a legend, honestly, that nobody really knows. Palantir, I know some of the founders and managers, and it's a very good company with really bright people. I know some of the people in quantum. They're not very bright. They're not very good people. You know, those are good shorts. even though the beta and factors will basically say that these stocks are all the same, over time they won't be. But again, there's only so much you're willing to pay. You know, Open Door is a really good example. Kaz, I think, is a really good manager, but how much do you want to pay for somebody's management skills? And in some cases, if they can compound for a long time, it's kind of an infinite number. And that's why Tesla is trading where it's trading. But there are points in time where I will say, I'm not going to give you $1 trillion of credit for something you haven't done yet. That's really hard for me to do. You know, I'll give you some credit, but at some point, you know, underwriting the business plan and valuing it at, you know, $1 trillion value you haven't created yet. You know, I was the CEO of a publicly traded company too. I didn't like it when my stocks went up. When my stock went up, because it makes my job harder. I have to now produce value that I haven't yet created, haven't even thought of yet. I'd much rather my stock price undervalue our company, because as I create the value, it'll go up with it. But if it's running ahead of value I haven't even created yet, that's a really tough thing. It's hard for me to, you know, create 500 million. Let's say a company I created is worth 500 million in my mind, but it's trading at $1 billion. Well, investors are assuming I'm going to create another 500 million of value. Well, that's hard. Rather they trade my stock at 400 million. So when I increase the value from say 500 to 600, well, you know, I'm happy I created intrinsic value. Well, offerings are only so good. You have a big stock price, great, sell your stock at that price. But now what? You still got to run the company over the long run. Yeah, QCI is definitely tracking. It's getting closer and closer to cash value. I don't know ANET. I haven't added it up, but it would be, say, maybe 100K. I'm not here to tell you anything. Well, Godel is my main focus. GodelTerminal.com. It's financial software that I've created and I'm actually working on in the background here, so I should probably get back to that. A lot of work to do.